Alternative funds specialise in non-traditional asset classes, the financial elements of which include derivatives, private equity, venture capital, commodities and hedge funds. That's a head-spinning list bursting with potential for any investment portfolio. I've come along to the Guernsey Funds Forum here in London to ask Jon Moulton, Chairman of Better Capital Fund, which of these alternative asset classes he believes will deliver the best performance over the next decade.
A very, very difficult question. Clearly, the next decade is a time frame where a lot of big issues are going to get played out. The Western world's over-indebted, running massive deficits. You have every reason to be fearful about their currencies being inflated away, about people being scared to continue buying their sovereign debt. You've every reason to be scared about interest rates rising sharply at some point when confidence in sovereign debt evaporates. As there's so much of it around, people begin to wonder if, like the Greeks and the Irish, anybody intends to repay it. And of course, they don't. So the big moving parts over the next few years in the Western world will be currencies and interest rates. You might prefer to try exposing yourself to the list of risks in the emerging markets, where you've got higher growth, commodities, real value, real growth, as opposed to what are likely to be low growth, unpredictable and dangerous markets in the West. Best bet from me, try a private equity fund, or better still, a selection of private equity funds in the emerging markets. You'll probably do well in the next decade. Will it be the best thing? No. Best thing will turn out to be something obscure, like buying a fund that invests in the tantalum metal or something really obscure, but I can't tell you that.
Looking at where things stand for the cautious investor, and they're just sort of hanging on in there trying to beat inflation, or is there a possibility of some better returns than that?
Better than inflation should be obtainable over time in most investments. The growth in the economy plus inflation tends to be what investments get roughly to over time. But protecting yourself against inflation in the Western world could be really a big deal. The difference between investing in the Swiss franc in 1950 and the pound sterling is a factor of 12 today, just simply because of the currency movements. The next few years could see really serious losses in sterling, the euro, the dollar, because of the very big deficits and the fear about more debt being issued and the actuality of more debt being issued. So if you want to protect yourself, you need to be near real assets, real needs, things that are likely to rise with inflation, really basic stuff, foodstuffs, basic commodities, electricity transmission, things like that which aren't going to go away and will rise with general inflation.
Alternative investment funds, are they really for the private investor?
In moderation. Alternative investment funds, by their very name, tell you they're alternatives. They're different. They typically have slightly higher return potential and slightly higher risk potential. Some of them have actually much higher return potential and much higher risk. And for most private individuals, they can't bear that level of risk. So they shouldn't. The people that can take such risks have to be very rich, ultra-high net worths, before they do a lot of it. A bit of it, I'd do it. Nice to have a small portion of your portfolio that can make more money and make your eventual retirement a little more comfortable.